All right, welcome back to the deep dive.
Yeah, welcome back, everybody.
Today, we are diving into Celsius Holdings.
That's right.
Ticker symbol CELH, for those following along at home.
That is correct, yes.
This is a company I think a lot of people are familiar with. It's been in the news quite a bit recently.
Absolutely. It's a very popular energy drink company with a stock chart that has looked like a roller coaster lately.
Oh, yeah. It's been crazy.
Lots of ups and downs.
We are using an article from the Motley Fool.
That's right.
To help us break down what's been going on with this company.
Yeah, they have a really nice detailed analysis of what's been going on.
So just to give everyone kind of a brief overview before we jump into the nitty-gritty here.
Absolutely.
Celsius stock, as of February 13th, had fallen about 80%.
80%, yeah, almost 80%.
Which is crazy.
That's a huge drop.
From its highs.
From its 2024 high down to $21.47 a share.
But then less than 2 months later.
That's right.
It's back up 60%.
Yeah, just in a matter of weeks.
This is a huge swing.
It's a massive swing, and it really highlights the kind of volatility you can see in the stock market.
So before we get to the rebound, I think it makes sense to kind of dig into why it fell so much in the first place.
Yeah, I mean, that's a good place to start.
So why don't you walk us through that?
Sure. So the Motley Fool article really points to this idea of a growth slowdown as one of the primary factors that led to that initial drop. Investors had really become accustomed to seeing Celsius deliver triple-digit growth year over year. You know, 100% growth or more. But in 2024, that growth rate really slowed down to about 3%.
Wow, that's a big difference.
It's a massive difference. And when a stock is priced for that kind of high growth expectation, that kind of slowdown can cause a pretty significant reevaluation by the market.
That makes sense.
Yeah.
When investors are expecting those huge gains and they don't materialize, the price has to adjust.
Yeah, the valuation has to come down to reflect the new reality.
And the article also mentioned something else that was going on at the same time.
Yes.
Increased competition.
Absolutely. Competition in the energy drink sector is incredibly fierce.
Yeah, it seems like every time I go to the grocery store, there's like a new brand on the shelf.
Right. It's a very crowded market, and there's always new players emerging and trying to grab market share. So there was a concern that Celsius might be losing ground to these competitors.
Okay, so we've got slower growth than expected and tons of new competition coming in. It's no wonder the stock took a hit.
That's right. That combination of factors really put downward pressure on the stock price.
Okay, so that's the decline. But then, as we said, it comes roaring back.
Yep, a 60% jump in less than 2 months.
So what changed?
Well, according to the article, a key turning point was the company's fourth quarter earnings report for 2024. So remember, the overall year's growth was slower, but this Q4 report contained some really positive signs that reassured investors about the company's strength.
Interesting.
Yeah. So even though the overall growth was slower, they still achieved record revenue in 2024, almost hitting $104 billion.
Okay, $104 billion with a B.
With a B, that's not a small number.
No.
Even with that slower growth.
But it sounds like the real optimism came from the details behind those big revenue numbers.
Absolutely. You're right. The real story lies in the underlying metrics. The report showed a 37% increase in points of distribution.
Points of distribution.
Yeah.
Meaning like the number of places where you can buy Celsius?
Exactly. How many stores are carrying their products. And even more impressive, sales volume increased by 22%.
22%? Now, how does that compare to the overall market?
That's significantly higher than the overall energy drink market, which only grew about 5%.
Wow. So they're growing way faster than their competitors.
That's right. And that really suggests that the demand for Celsius products is still very strong.
Okay, so even if the percentage growth wasn't as high as before, they're still expanding rapidly and selling a lot more product.
Exactly. They're reaching more customers, and those customers are buying more Celsius.
And that suggests that maybe the slowdown was just a blip.
Yeah, it could have been a temporary thing rather than a sign of long-term problems.
Okay, so the Q4 report gave investors some reason to be optimistic.
Yeah, it showed that the company was still performing well despite the challenges.
But there's another big piece of the puzzle here.
Yes.
The Alani Nu acquisition.
Right. Remember we were talking about competition?
Yeah.
Well, this acquisition directly addresses that issue by bringing one of the fastest growing energy drink brands under the Celsius umbrella.
Okay, so tell us a little more about Alani Nu.
So they've been experiencing really impressive growth, over 50% compound annual growth rate.
Wow.
Over the past 3 years.
Okay.
And they're already profitable.
So they're not just growing, they're making money.
Exactly. And for Celsius to be able to acquire a company like that is a pretty big deal.
Yeah, it seems like a very strategic move. But what's really interesting to me is the price.
Oh, yeah.
The Motley Fool article says that Celsius paid less than 3 times Alani Nu's sales.
Yeah, which is pretty low, especially when you compare it to Celsius's own valuation.
Right. I mean, Alani Nu was growing much faster.
Right.
So why would they sell for so cheap?
That's a great question. And the Motley Fool article actually raises that very point.
It seems like almost too good of a deal to be true.
It does. And understanding the motivations behind Alani Nu's decision to sell could give us a better idea of what the long-term implications of this acquisition might be.
So that's something for our listeners to maybe dig into on their own.
Yeah, it's definitely worth exploring further.
But even setting that question aside for now.
Okay.
The synergies between these two companies seem pretty obvious.
Oh, absolutely. Celsius has this huge distribution network already.
Right.
And they can use that to get Alani Nu's products into way more stores.
Yeah. Alani Nu gets instant access to a much wider market.
Exactly. It's a huge opportunity for them to accelerate their growth.
And the article also mentions international expansion.
That's right. Celsius is already selling its products in a number of international markets.
Right.
And now they can leverage that infrastructure to help Alani Nu expand globally as well.
So it's not just about the U.S. market.
Nope. This acquisition has the potential to really boost growth on a global scale.
Okay, so we've got this major acquisition.
Yes.
But Celsius isn't just relying on that for growth.
No, they're also pursuing organic growth initiatives.
What does that mean exactly?
So that means growing their existing business through things like expanding their product line and entering new markets.
Okay, so give us some examples.
Well, for starters, their international revenue grew 37% in 2024.
Oh, okay, so they're already seeing success overseas.
Exactly. And they're also making moves to diversify beyond just energy drinks.
Like what?
They've recently launched a new line of hydration products.
Interesting. So they're trying to tap into that growing health and wellness market.
Right. People are becoming more and more health conscious. Yeah. And Celsius is trying to position themselves to meet those changing consumer demands.
So it's possible that the slower growth we saw in 2024 was just a temporary pause.
It could be. They might have been intentionally slowing down to focus on these bigger strategic moves.
Okay.
Like the acquisition and the new product lines.
So the high growth could come back.
It's definitely possible.
And when you factor in Alani Nu's revenue,
yeah,
Celsius is looking at pro forma revenue of $2 billion for 2024.
That's right.
And the article says the stock is currently trading at about 4 times sales.
Yeah, which is considered pretty cheap.
Especially for a company with this much growth potential.
Absolutely. The article actually uses the word cheap, which is pretty significant coming from an analyst.
Okay, so growth is important.
Yeah.
But profitability is crucial, too.
Absolutely. You can't just grow your revenue. You need to make money.
And the Motley Fool article highlights another move that Celsius made to improve profitability.
Yes, the acquisition of Big Beverages.
Tell us about that.
So Big Beverages was actually Celsius's manufacturing partner.
Okay.
And Celsius bought them for $75 million in November.
And what was the goal of that acquisition?
It was all about increasing efficiency and control over their production process.
Okay.
By owning their manufacturing capabilities, Celsius can manage their inventory, better experiment with new products more quickly, and most importantly, lower their production costs.
Okay, so lower costs mean higher profits.
Exactly. And the article points out that Celsius has already been doing a good job of growing their profits.
Yeah, their gross profit has been growing faster than their revenue for the past few years.
Meaning they're getting more efficient.
Exactly.
Yeah.
And their earnings per share have been growing even faster.
So they're making more money per share of stock.
That's right.
And the expectation is that these recent acquisitions will just accelerate those trends.
Absolutely. Alani Nu brings in a lot of revenue, and Big Beverages should help to lower costs.
So we could see even faster growth in profits.
That's the idea.
Okay, so taking all of this into account,
the stock rebound, the strong sales, figures the acquisition of Alani Nu, and the initiatives to improve profitability.
Right.
What's the Motley Fool's overall take on Celsius?
They seem pretty optimistic.
Okay.
They believe that the recent stock rebound isn't just a temporary blip, but the beginning of a much bigger comeback.
They're bullish on Celsius.
Yeah, they see a lot of potential for growth in the coming years.
Interesting. So for our listeners out there who are maybe thinking about investing in Celsius, what's the current state of play?
As of March 26th, Celsius stock was trading at $34.92 per share. It was down slightly for the day.
And what's the market cap?
The market cap is around $8 billion.
All right, so there you have it, folks. The story of Celsius Holdings.
It's a company that has experienced some ups and downs.
Yeah.
But they seem to be well-positioned for future growth.
They've got a strong brand, a growing product portfolio, and a strategic plan to expand their reach.
Absolutely.
And the recent acquisitions of Alani Nu and Big Beverages should help them to achieve their goals.
They're definitely moves that position them well for the future.
But as with any investment, there are always risks.
Of course.
The energy drink market is very competitive, and there's no guarantee that Celsius will be able to maintain its growth trajectory.
Right. And the Alani Nu acquisition, while promising, does raise some questions that investors should consider.
So for our listeners out there,
yeah,
I think the big takeaway here is that Celsius is a company to watch.
Absolutely.
They're doing some interesting things, and they have the potential to be a major player in the beverage industry for years to come.
I agree.
But as always, do your own research.
Yes, always do your own research.
Before making any investment decisions.
Don't just take our word for it.
Think about what other factors might influence Celsius's performance.
Right.
Look at the competitive landscape.
Yeah.
Analyze consumer trends.
Exactly.
And see if you can identify any potential opportunities or challenges that we didn't cover on our deep dive.
That's a great way to approach any investment decision.
Thanks for joining us on the deep dive.
Yeah. Thanks everyone for listening.
We'll see you next time.
See you next time.